Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today is March 14th, 2020. Markets are closed for the weekend, Saturday, and just want to go over SP 500 for this Friday and what it's looking like shaping up for Monday. Excuse me, real quick. This week has been absolutely insane, absolutely insane. And just go over that real quick, and of course go over oil since that market has been destroyed here as well. So anyways, so looking at SP 500, you're going to use 1 minute chart and 5 minute chart. Had a couple setups today using the expanding triangle 78.6 trade for it, and there's another setup that I'm looking at right now at taking as well. And so what we had right here, we had a 1, 2, 3, fourth point up here using this again. 1, 2, 3, 4. There's the fourth point. If you take this high right here and come back down, that gets you your your resistance zone that I'm looking for, an enter right there, and then the exit would have been down here at the previous low of the day. So not that bad of a setup for it right here, but obviously it did not work out. The signature trade I took, I actually was trading off the Russell 2000 today, and I'll show you that here in the end real quick, because it was a losing trade, but I'll show you the reason why I was looking at taking it. And so it hits it up there, hits that resistance, is going back down, but then look what you have forming over here. Let me delete these because those as of now we don't need it. So what you have right here is you have another expanding triangle that got formed. And what I'm looking for in this setup is I'm looking for like a base down here, coming up, create that first point, second point, third point, coming down to the fourth point, where that's what I'm looking for, the support zone down around the 78.6 level, and then going up to the fifth point. So there's two things that I have in my favor when I'm looking for this trade. One, making the fourth point, anticipating it going up to the fifth point, and also the 78.6 to 88.6 retracement level. So same thing on the short side right here. Again, 1, 2, 3, 4. There's fourth point, but then when you have one going up the opposite way, 1, 2, 3, 4, that becomes kind of like the crossroads right there. Which one is going to win out? Because obviously one of these is going to win out. And don't worry about this purple line. All this purple line right here is the 800 EMA, and all it does is help me keep on the right side of the trade I'm looking for. So when it's like when price is on the middle of it right there, it doesn't really matter which way I'm going, either long or short. But like if price is below it and trending below it, then I'm gonna look for shorts, and of course price is above it, staying above it, then I'm gonna look for long. So just try to make it easy as possible to decipher the trend. So anyways, so now we have a definite 78.6 expanding triangle long setup again. 1, 2, 3, 4. So price came out of this resistance zone, but now it's going down into this support area down here. And I believe usually I like to use the very bottom right here, but as you can see, price didn't come down to it, so it came down to the 61.8 level, and that is very valid. But just for this example up here, we're going to move it up, because you can use this one of course perfectly as well, but usually I just like to play on the safe side, so usually I take the swing low. But obviously for this one, that was not the correct level for it. So when price hits that resistance level from the previous expanding triangle short move we're looking for, it goes and it creates a long setup as well. Again, first point, second point, third point, higher high. There's the fourth point right here at the lower low. So now you have a decision to make right here. If I was in this trade right here, the short trade, do I go ahead and get out of it right here because this other one, or do I wait and see what had happened right here? Well, as you can see, right when it gets down to that right area, it moves steadily on way back up over there, hits resistance area again, takes it out one more time down to low. This time it takes its 78.6 level from it, and or the 61.8, depending on where you have it. We'll just use that swing low right there, and ticks down, barely hits it, ticks you in the trade. So say if you have the only way to get in this is if you have a resting order right here. I mean, that's the only way to do it. If you want to play it safe, look for a second entry trade, but which is basically just like, so you have the low right here. Let me just show you what second entry looks like. So you're going down, you have the low right here, so now you're looking for a higher high. There's first one, pull back, second one. Or you can do it if you're looking at from the very top, but usually on the 1 minute chart form, you're going to get all the way like 8 different second entries before it happens. So if you're going from the high up here, let's see, there's pullback, there's a higher high, first entry, wait for another pullback, there's a pullback, okay, there's your second entry right there. So technically if you're looking for a second entry trade, this is where you can get in. But the reason why I again like to use deeper Fibonacci retracements is so many times I'd get faked out and get in these second entries right here that it would cause me to lose. So now I always wait until it gets closer back to here. So you have second entry right there. There's third entry going back down. There's fourth entry, fifth entry, sixth entry. So as you can tell, it's like on the eighth or ninth entry before it gets down there. So that's why I usually try to wait before it gets down there to start counting down there. Or you can do a failed second entry, which is basically all it is. There you have the low right there. So now what we're looking for is low with fake outs to the downside. So up, 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 up. There's the first one right there, makes higher high. There's the second one right there. So when price gets up here, you can get in and go long right there. But again, that's not a very good entry compared all the way down here. So it just, when I'm trading this, I try to use my own judgment, try to be as safe as I can. But what I'm finding for this trade, you really just have to use resting orders and just let it stand. Sometimes price is just going to move through you and take you out. And hey, it's a loss, no big deal. Because when it does hit and works out like this, the way I have this set up right here, this is the exit level right there. Just below there, it's almost a 4-to-1. It's about 3.5 to 1 risk reward ratio. So even if you're only right, even if you're only right 40 to 50% of the time, it's going to be a very successful trade. So anyways, so then price comes back here and then just skyrockets up, takes this one out. So obviously the short trade up here, that was not the correct long-term swing. Obviously it would have made some good profit, some decent profit depending on where I'd gotten out. Again, if I was in this trade, this is where just trade management comes in. Once you start getting a battle between these two over here. So we'll go ahead and take that off. You can see price came back down, hit the support box. Let's move this over a little bit. Price hit the support box, 78.6, 80.6, rocketed it off, took out the target level we're looking for right there. And so that's a pretty easy trade. But let me show you something for, I'm going to go to the 5-minute chart here. Because we have now another setup that has happened for the S&P 500, and it's another expanded triangle, and it is to the short side right here. And what these black lines are just the previous day's high and low. So previous day low, previous day high right there. You'll see the price a lot of time bounce off. I'm using that support level, so that's why I like to know where they are. So anyways, so here you have price coming down here and then pulls back up. So there's point 1, pulls up, point 2, goes all the way down here, point 3, and now when it broke this level right here at about 2660.75, this created point 4. So what I did was just started looking back to see where the 78.6 box is, where it hit it as well, and there we go right there. So price is hit the 78.6 box for it, and as you can see, when it did that 78.6 to 88.6 box, that's where that was its retracement level for today. So after President Trump gave that announcement today about whatever it was doing with the coronavirus or the state emergency or whatever it is, I didn't listen to it, I just heard about it. They saw the market just take off from about 25.44 all the way to 27.03 in a matter of about, let's see here, 5, 10, 15, 20, 25 minutes. Just insane, absolutely insane. So that's where it's sitting at, opening up for over the weekend. So open up Sunday night for the markets, and then of course Monday morning for the U.S. markets when those open. But anyways, when these markets open Sunday night, it'll be interesting to see what happens. Will it continue up? Right now it's definitely running into resistance level. So if this is going to be a short-term resistance level for it, then the exit we're looking for down here is going to be around 2291.50. So in this landscape, this market, don't rule anything out about where it could be headed, and until price really starts breaking that 800 level right there, because as you can see for the EMA, the 800 price has just been on the 5-minute chart right here. I mean, it's just been down, 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 down. So it's pretty much for the whole week, nothing but what I should be looking for is pretty much nothing but shorts ever since what's that, March 5th right here. So definitely we're going on 10 days now. So pretty much nothing but shorts down there. So this is the first time really that since then price has broken up above 800 EMA. So it could mean it's time for some consolidation, or maybe it's now finally breaking up and moving out to the upside. But that's just on the 5-minute chart. If you move it out to like the hourly chart, it's well below the 800 EMA. Let's see here. Yeah, see, there it is, way up there. So depending on the time frame you're looking for, it can still be a long ways away for it. But real quick, I want to go over to the daily chart real quick because it's something I touched on the other day. Let me hide okay, it doesn't work on dailies anyways. Cool. So as I mentioned the other day, what we were looking for right here, this is another expanding triangle trade for it. First point, second point, third point, and all the way down here, fourth point. Now, if price breaks this pivot point right here at about 23.23, then we'll have to start looking for other pivot points to find the support area for this one. But this is a major swing low right here. You can just tell what I consider like a major point is when there's like an extreme level going into it. And as you can see from that sell off down here, that's an extreme point right there. So that's why that's the level I want to use for this one. And since then, price went all the way back down in there, hit it real nicely, and then today rocketed off out of there. So this does, at least for the time being, look like this could be a really good setup, and a big move to the upside could be coming. If this is going to be on the expanding triangle 78.6 trade right here, similar setups as we're looking at the 1 minute, 5 minute chart for a long side for it. So if it is, and this low holds down here at about 23.1275, then the target exit we're looking for up here would be just under the 1.272 Fibonacci extension level at about 36.70ish, right around there, somewhere in that area right there. Of course, it can go higher than that, but that's just the target I look for on this type of trade setup for it. So far, it's looking pretty strong for it. So we'll just monitor it and see what happens. Also, one thing that I do expect to get filled is this gap up right here on the daily chart from about 33.28 to 33.16. Gaps, they'd like to be filled, so I expect that one to go back up there and get hit. So far this trade setup is looking pretty nice, and you know, if you're bullish on the market at all, this could be a good level to get in if this setup does come to fruition over here. Now we'll look at oil here real quick. Definitely not on my daily chart. All right, so looking here on the 5 minute chart, we'll just go over here from left to right because a couple steps to talk about right here. So going into the other day right here, we have another setup. Let's see here. It's going to be a short setup. There's first point, second coming in from the top. So going down, first point, second point, third point. Here's the fourth point right here, but as you can see, it never even came up, hit the 78.6 level box right here. And then this is what I was talking about for the S&P 500 right here. This is when you got to start, or I have to start kind of talking to myself, keeping this video journal, is keeping the is when you start getting a move going the other way. So definitely still some time. Say I got in, or you got in up here somewhere and it's waffling around down here. Well, then look what's happening down here. Let me take out these because these obviously don't work out being a fully complete short trade. So now you have down here going up, there's the first point, second point, third point, and then when it breaks this low right here, which is right there, there you have the fourth point. So if I draw my Fibonacci move right there, they can see hitting up between the 78.6 and 88.6 box right there. So now you have to decide what you want to do, because obviously if you're shorting this market right here, you're seeing this support bouncing off of it, which is not what you want to see, because you want to see price just moving on through there. But now it's getting some major support, and look at that big support level right down here. So now we're getting it, and now it is in a very valid expanding triangle 78.6 long trade right here. And look what it ends up happening. It gains some support and then just skyrockets up there. Bam, hits that target. Let me take that one off there real quick. There is the target right here. Take these off since this is a complete trade. And there it goes up and hits that target right there. So obviously the long worked out. So that's one thing moving forward I'm going to be looking for, is if I'm in a trade and in the opposite direction another one forms, I'm going to get out of that trade and probably go the opposite direction, because that's what it seems like. It seems to be working out here. We'll go ahead and take that off. Now we have two more of these trades to talk about. So then going up again, now you have first point, second point, going up here, third point, and you could use this one. This one's valid too, first point, second point, third point. But when price kept on going down right here and broke that low, but then can you go down and broke that low? I'm just using this one right here. So then what you do, I believe I use this one right here, and the reason why I use that one is you have that pivot point in that one right there. So there are definitely some big levels that was a little bit more solid than this level down here, but this one is perfectly valid as well. So using that one right there, from the first point, second point, third point, fourth point. That one, you can see how price hit this level right here, and then right when President Trump's doing that speech at the end of the day today, oil market took off from about 32 or 31.89 all the way up here to 33.81. So another huge move in the oil market, but it did not complete the target up here, because target we're looking for up here is about 34.75. So it did not complete that target. Then on top of that, right now, let me delete that. It created a short setup right here for 78.6 trade. So there's the first point, second point, third point, going up high once it broke this level up to the fourth point. Now it pretty much created a double top up here. So it went through a 78 and 8.6 level, and plus you had the previous high of the day. So this is definitely, if I was trading the old market, one that I'd be looking for, just because you have all these levels up here to provide some resistance to it. Came up here, made a double top. My exit would have been slightly above the 100 level, so probably around like 33.96 and probably about $34 to make it a nice round number. So still safe, still in it. So when it hit that level, it got some resistance, and now it's starting to move back down. So as you can see from the couple of other trades, right now for the oil market for the beginning of next week, I am leaning more towards the downside for the market, just because you first had this long setup right here, went up, made its move, but it also generated a short setup. And as you've seen from a couple other trades, the second setup seems to be the one that wins out. So if it was a short setup first and a long setup second, the long setup seems to be winning out. In this case, is the long setup first and now short setup second. So that is why going into next week, I am bearish in oil and looking for a target of around $30 and say 40 cents, somewhere around there, $30.50, somewhere around there. That level, of course, price can go lower, of course it can, but that's the level I'm looking for that trade right there for oil. And I'll tell you what, let me show you, where's that Russell trade here real quick. Show what I was thinking here. It's off the 1 minute chart. All right, so here in the Russell chart today, this was a losing trade that took live. So I was looking for a 78.6 long right here. You can see prices going up. It made kind of like a two level measured move somewhat over there. So there you have first point, second point, third point. So come down here, I was looking for the fourth point. There's that. There's that. So that's what I was looking for. It probably got a little bit, I could have scalped something out of there, but of course I was like, screw that, got greedy, came on there, broke out, broke the low right there and took me out. So it stinks, but hey, it is what it is. But then if I just scrolled over some more, oh, this breaks my heart right here to see this. This breaks my heart. Use this low right here and drag it up there. So as you can see, moving up, and it's probably easier to see in a 5 minute chart anyway, so I'll use the 5 minute chart here. So you have that low going up, first point, second point, third point, but still going up, third point, and then coming down here, the fourth point. And look what happens. So this was such a perfect setup, because you have the previous low of the day, you have the 78.6 to 88.6 support level box looking to get in. And look what happens. It hits the previous low of the day. Doesn't take the 78.6 box, but to be honest, if I was looking to get in this trade, I'd have had my entry slightly above the previous low of the day right there. 1096.7, something like that. Again, this is a perfect world. Of course, I didn't do this. Oh gosh, I wish I did. And look what happens. It takes off there, and then just pretty much takes off, consolidates a little bit, and then bam, skyrockets up again. And look at the exit level right up here. This is the exit box right here. Barely ticks and hits it. My exit level would have been somewhere like right around here, but goes up there, hits it, knocks it out, and that's definitely the trade of the day right there. Oh man, I wasn't even at my computer at this time. I had to go somewhere, but man, I wish after this trade was lost, I was like, I'm done for the day. But man, I wish I had stayed around for this about 5, 10, 15, another half hour or so, and actually notice this trade happening. Because oh gosh, what a perfect setup. But oh well, it is what it is. Live and learn. Then on top of that, now so that one just got completed right there. This trade is completed, and now it created a short setup right here. See here, 1, 2, 3, 4, and then going up and using this point right here. Now it is in a short setup, and also 5-minute chart hit 100 on the 800 EMA. So let me just go mark that 1, 2, 3, 4. So we are in a short setup here in the Russell 2000, and if this is going to be a legitimate short setup, that is going to go down, and this is the exit level we're looking for, around about 1,027. So low Russell 2000 weekend bonus for you right there. It's the market, to be honest, I like trading the most right now rather than the S&P 500. But both of those are the two main markets I'm trading at the moment. Of course, you got the Dow and NASDAQ as well, but these are the two I like to focus on. Anyways, that's that. Have a good weekend. Stay safe out there. It's crazy times, absolutely insane. But anyways, have a good one, and take care. Bye.